Welcome to our deep dive exploring the psychology of trading.
Oh, yeah, always a fascinating topic.
Our guide for this deep dive is Tom Hougaard and his book, The Best Loser Wins.
Definitely a unique perspective on trading.
We're going to uncover the psychological elements that can make or break a trader.
Absolutely, it's often the overlooked factor.
So let's jump right in.
Sounds good.
Hougaard starts off with a really captivating analogy. He compares the market to an elusive mistress.
That's a powerful image.
What do you think he's getting at with that comparison?
Well, it really captures the emotional roller coaster of trading.
Oh, I can see that.
The market can be so alluring, promising big rewards, but it's
That's good.
also unpredictable and can leave traders feeling frustrated.
Almost betrayed, even.
And exactly, that push and pull can really mess with your head.
And it's something most people don't even realize is happening.
Right, that's why understanding these psychological dynamics is so crucial.
Now, Hougaard doesn't shy away from the harsh realities of trading.
Oh no, he's very upfront about it.
He drops this statistic early on. Roughly 80% of retail traders lose money.
Wow, that's a staggering number.
It's huge. He even compares it to, like, dentistry.
Dentistry.
Yeah. Imagine if dentists had an 80% failure rate.
Oh, that's a scary thought. Nobody would go to the dentist.
Exactly. So why does this happen in trading?
You know, it's not just about intelligence or technical skill.
Those are obviously important.
They are, but what really sets successful traders apart is their psychology.
So are you saying our minds are the biggest obstacles in trading?
In many ways, yes.
How so?
Well, our natural instincts often clash with what it takes to succeed in the market.
Interesting.
Hougaard points out that many traders get so fixated on charts and indicators that
They forget about everything else.
precisely they neglect the inner game.
And that leads to mistakes.
It can, for sure. Things like cognitive dissonance can creep in.
Cognitive dissonance.
Yeah, it's that mental discomfort you get when you hold conflicting beliefs.
I'm not sure I follow.
Let's say you've got a profitable trade open, but you're terrified of those profits disappearing.
Oh, I've been there.
So you close the trade early even though your analysis said to hold.
It's like self-sabotage.
Exactly. That's cognitive dissonance at work, your fear battling your rational thinking.
That's a perfect example. I've definitely done that before.
It happens to the best of us.
So it's like our brains are fighting against our own success.
Sometimes it can feel that way.
That's wild. Now, on the topic of success, Hougaard talks about Tiger Woods.
Oh, the legendary golfer.
Yeah. He mentions Tiger's ability to just wipe mistakes from his mind and move on.
That mental resilience is incredible.
He connects this to trading. How so?
It highlights the importance of letting go.
Letting go.
Yeah, letting go of past trades, whether they were wins or losses.
You mean not dwelling on them?
Exactly. Dwelling on past mistakes can cloud your judgment and lead to bad decisions.
So just like Tiger forgets a missed putt and focuses on the next shot.
Exactly. Traders need to develop that same mental reset button.
It's about treating each trade as a fresh start.
Yes, each trade is a new opportunity, independent of what happened before.
Yeah, I got to ask about this story Hougaard tells about Philippe Petit.
The high wire walker.
Yeah. He walked between the Twin Towers on a tightrope.
Oh, yeah, that was incredible. He spent years preparing for that.
Years. He even faced his fear of spiders by studying them.
Wow, talk about commitment. But what does this have to do with trading? It showcases the power of mental preparation and visualization.
I see. So, like, Petit didn't just wing it.
Not at all. He planned meticulously, visualized every step.
And even tackled his fears head on.
Exactly. And traders can learn from that.
How so?
Imagine yourself in a high-pressure scenario, like a big loss or a sudden market swing.
Those can be pretty intense.
They are. But visualizing those situations beforehand can help desensitize you to the fear.
So you're more prepared when those situations actually happen.
Right. It's about training yourself to stay calm and make rational decisions, even when things get crazy.
It's like building up a mental muscle for trading.
I like that analogy. It's about building up that mental toughness.
Now, Hougaard also throws out this idea that to be successful in trading, you have to be good at losing.
Yeah, that's a bit of a controversial one.
It sounds counterintuitive.
It does, right. But it's about reframing how you think about losses.
In what way?
Losses are inevitable in trading.
True, but everyone wants to win.
Of course. But it's those who can learn and adapt from their losses who ultimately break free from that 80% failure rate we talked about.
So it's not about avoiding losses, but about managing them effectively.
Exactly. It's about extracting valuable lessons from those losses and not letting them cripple you.
Okay, I'm starting to see what he's getting at.
It's a powerful concept, and it's crucial for long-term success in trading.
This is all really thought-provoking.
It definitely challenges conventional thinking about trading.
It's making me rethink my whole approach.
That's a good sign. It means you're on the right track.
I'm curious to dive deeper into this ideal trading mindset he talks about.
Me too. It's a fascinating concept.
We'll have to explore that further in the next part of our deep dives.
Definitely, there's a lot more to unpack there.
I'm looking forward to it.
Me too. This is getting really interesting.
It is. Stay tuned for part 2, where we'll delve deeper into the practical side of building this winning mindset.
It's going to be a good one.
Absolutely. We'll see you then.
See ya.
All right, so we've established that mindset is super important for trading and that losses are just part of the game.
Right. They're inevitable. You can't avoid them entirely.
But how do we develop that ideal trading mindset that Hougaard keeps talking about? Where do we even start?
Well, he really emphasizes the importance of self-awareness, like really understanding your own psychological tendencies as a trader.
So like knowing your strengths and weaknesses.
Yeah, but more specifically, it's about understanding how your emotions and biases affect your trading decisions.
I see. So it's not just about personality. It's about how those personality traits play out in the market.
Exactly. He calls this process creating your book of truths.
Book of Truths. Sounds kind of intense.
It's essentially a detailed trading journal, but it goes way beyond just logging your entries and exits.
What else do you put in there?
Everything. Your emotional state before, during, and after each trade, your thought process, any doubts you had.
Like a diary of your trading journey?
Sort of, but with a very specific focus on your psychology.
Why is that so important?
Because it helps you uncover the hidden patterns in your trading behavior.
Patterns. Like what?
Well, for example, maybe you always enter trades too early because you're afraid of missing out.
FOMO. Classic.
Right. Or maybe you close winning trades too soon because you're scared of losing those profits.
I can see how that would be helpful to know.
It's about shining a light on those subconscious tendencies that might be sabotaging you.
So it's like self-therapy for traders.
In a way, yes. The Book of Truths helps you become your own trading psychologist.
I like that. But, okay, let's say I've identified some bad patterns. What do I do about it?
That's where the real work begins. Once you're aware of those tendencies, you can start developing strategies to counteract them.
Interesting. So it's about turning those weaknesses into strengths.
More about managing them effectively.
Okay, I'm following.
Hougaard gives an example. From his own experience, he realized he was prone to something he calls value trading.
Value trading. Like buying stocks on sale.
Kinda, yeah. He would buy an asset just because the price had dropped significantly, thinking he was getting a bargain.
But isn't that a good thing?
Not always.
Yeah.
In the market, a low price doesn't necessarily mean a good investment.
I see. So he was letting his emotions, that desire for a deal, override his analysis.
Exactly. And by tracking his trades in his Book of Truths, he became aware of this pattern and could start making more rational decisions.
That's pretty powerful. Just the act of writing things down can have such a big impact.
It's amazing how much we can learn about ourselves just by paying attention to our thoughts and actions.
So what else does Hougaard recommend for developing this ideal trading mindset?
He talks a lot about the importance of pre-trading rituals.
Rituals, like what? Meditating or something?
It can be anything that helps you get into the right mental space for trading.
Interesting. So it's about creating a clear separation between your everyday life and your trading life.
Exactly. It could be as simple as taking a few deep breaths, reviewing your trading plan, or even just making a cup of coffee.
It's about setting the stage for a successful trading session.
Right. It's a way to signal to your mind that it's time to focus and get to work.
I like that. It's like putting on your trader hat.
Exactly. And Hougaard also suggests simulating stressful trading scenarios.
Like what? Imagining the market crashing?
It can be anything that triggers those feelings of fear and anxiety.
Why would you want to do that?
It's about practicing staying calm under pressure.
So when those situations happen in real life, you're better prepared.
Precisely. By mentally rehearsing those challenging situations, you can train yourself to react in a more disciplined way.
It's like a mental workout for traders.
Exactly. It helps you build up that mental resilience.
This is all really insightful, but it sounds like a long process developing this mindset.
Oh, it definitely is. It's a journey, not a destination.
It's about continuous self-improvement.
Absolutely. You're always learning and growing as a trader, and that includes your psychology.
Patience is key.
It's essential. You can't expect to master your mindset overnight. It takes time and effort.
Speaking of patience, another challenge for traders is emotional detachment.
Oh, yeah, that's a big one.
It's so easy to get caught up in the excitement of a potential win or the fear of a loss.
It's totally natural, but it can be really destructive to your trading.
So how do we achieve that detachment?
Hougaard calls it disassociation, the ability to separate yourself emotionally from the outcomes of your trades.
It's like observing the market from a neutral perspective.
Right, without getting swept up in your own hopes and fears.
I can see how that would be helpful, but it sounds really hard to do.
It takes practice, but it's definitely achievable.
Yeah.
Visualization is a powerful tool.
It's like picturing yourself staying calm in a stressful situation
Exactly. Imagine yourself handling both winning and losing trades with composure.
and sticking to your plan no matter what.
Right. By repeatedly visualizing those scenarios, you're training your mind to react in a more disciplined way.
It's like creating a mental blueprint for success.
I like that. It's about programming your mind for optimal performance.
This is all making a lot of sense, but I want to be clear about something.
Sure, what is it?
This isn't about suppressing emotions altogether, right?
No, not at all. It's about channeling them constructively.
So becoming the master of your emotions instead of letting them master you.
Exactly. It's about harnessing the power of your emotions without letting them control your decisions.
That's a great way to put it. I like that.
Hougaard uses a really interesting analogy to illustrate this.
What's that?
He talks about Philippe Petit, the high wire walker.
Him again. What does that have to do with emotions?
Well, Petit had a major fear of spiders, which is pretty understandable for someone who walks on a tightrope hundreds of feet in the air.
Yeah, I can see that.
But instead of trying to ignore his fear, he decided to study spiders in detail.
Really?
He figured that by understanding his fear, he could overcome it.
So it's about facing your fears head on.
Exactly. And Hougaard suggests that traders should apply the same principle to their emotions.
So if you're afraid of taking losses, you shouldn't just try to push that fear away.
Right. You should try to understand it, explore where it's coming from, and develop strategies for managing it.
It's about turning fear into a source of information instead of letting it paralyze you.
Precisely. Fear can actually be a valuable signal if you learn to interpret it correctly.
Okay, that's a really interesting perspective. I never thought of it that way before.
It's about shifting your relationship with fear, seeing it as a potential ally instead of an enemy.
This is all really fascinating. I'm learning so much.
Me too. Hougaard's insights are really thought-provoking.
I'm curious to hear more about how he applies these concepts in his own trading.
Well, that's a perfect segue into the final part of our deep dive.
Oh yeah, I'm excited to hear more about his personal approach.
We'll delve into some of the more nuanced aspects of his trading philosophy and see how they can help you navigate the psychological complexities of the markets.
So we've talked a lot about self-awareness and accepting losses, but there's one idea from The Best Loser Wins that really stuck with me.
Which one is that?
This line, in trading, the best loser wins.
Ah, yes. That's a classic Hougaardism.
It sounds kind of like a contradiction. How can the best loser win?
It is a bit paradoxical, isn't it?
Yeah, what do you think he means by that?
Well, he's highlighting the importance of managing losses, both mentally and financially.
No, it's not about avoiding losses completely.
Exactly. That's just not realistic in trading.
But everyone wants to win.
Right. Of course. But successful traders understand that losses are inevitable.
It's part of the game.
Exactly. And it's about how you handle those losses that really matters.
So it's not about never losing. It's about how you bounce back from those losses.
Precisely. The best losers are the ones who can learn from their mistakes, adapt, and keep moving forward.
I see. So it's about resilience, that ability to take a hit and keep going.
Exactly. It's about having a process, a system that you trust, even when you're facing setbacks.
Makes sense. So a big part of that is risk management.
Absolutely. Hougaard talks a lot about protecting your capital.
How do you do that effectively?
By always assuming you're wrong until the market proves you right.
Wait, so you go into every trade expecting to lose?
Not necessarily expecting to lose, but acknowledging the possibility of being wrong.
Isn't that a bit pessimistic?
No, I think it's more about being realistic.
How so?
Well, if you assume you're wrong, you're more likely to set appropriate stop-loss orders.
Those are those orders that automatically sell your position if the price drops below a certain level.
Exactly. And that helps you limit your losses on any given trade.
So it's about protecting yourself from those big, unexpected losses.
Exactly. It's about preserving your capital so you can stay in the game for the long haul.
I see. It's about survival, not just winning every single trade.
Exactly.
Yeah.
It's about having a long-term perspective.
And a key part of that is discipline.
Absolutely. Having clear rules and sticking to them, even when your emotions are telling you otherwise.
It's easier said than done, though.
It definitely takes practice. That's where the Book of Truths comes in handy.
Right, that trading journal, it can help you track your emotional state during trades.
And identify those moments where you might be letting your emotions get the better of you.
So it's like a tool for self-reflection and improvement.
Exactly. It helps you become more aware of your own psychological tendencies.
So you can start to counteract those negative patterns.
Precisely. It's about becoming a more disciplined and consistent trader.
That makes a lot of sense. This has been a really eye-opening discussion.
I'm glad you found it helpful.
I think we've covered some really important concepts here.
Absolutely. Understanding the psychological side of trading is crucial for success.
It's not just about charts and indicators.
It's about mastering your own mind.
And that's an ongoing journey.
It is. You're always learning and evolving as a trader.
So, to wrap things up, what's the key takeaway here?
I think it's about embracing the idea that the best loser wins.
It's about reframing how we think about losses.
Exactly. Losses are inevitable, but they don't have to define you as a trader.
It's about learning from your mistakes, adapting, and coming back stronger.
Couldn't have said it better myself.
I think we've given our listeners a lot to think about today.
Hopefully, they can apply these insights to their own trading journey.
Thanks for joining us on this deep dive into the psychology of trading.
My pleasure. It's been a great discussion.
And remember, in trading, sometimes the best loser wins.
Words to live by.
We'll see you next time.
See you then.